Wait before you invest another dollar. Beneath the surface of every glossy financial guide lurk hard truths the experts rarely admit, facts that can make or break your financial journey. Consider this: 90% of day traders lose money, and the average investor trails the market by nearly 4% each year. That's not trivial, it's catastrophic for your future. But how do you avoid becoming part of those grim statistics? Stick around, /n/n. Let's start with fact 1. Investing is far more about psychology than mathematics. Yes, the numbers matter. But the emotional roller coaster, greed, fear, FOMO, is what derails most investors. Think anyone can handle a P/E ratio? Sure. But can you stay rational when your stocks plunge 30% in a week? That's the real test. In March 2020, the pandemic crash wasn't just a financial collapse, it was a psychological earthquake. Mathematically, it was a buy-the-dip moment. Emotionally, though, panic reigned. The winners, those who stayed calm. So before building a perfect model, ask yourself, can I stay steady during chaos? Can I resist chasing hot hype? Because mastering your mindset beats mastering any formula. /n/n. Fact 2. You will make mistakes, lots of them. No shortcut will remove this truth. Even seasoned investors miss time entries, exit too early, or hang on to losers far too long. The difference isn't avoiding errors, it's how you react. Do you berate yourself and spiral, or deny it and repeat it? Both are disasters. The real money is in lessons learned. See every mistake as tuition, painful, yes, but invaluable if it teaches you what not to do next time. /n/n. Fact 3. Taxes aren't your enemy, they're proof you made money. But many investors avoid premature sales just to dodge capital gains, only to watch gains vanish in the crash. It's better to pocket gains and pay the tax than gamble everything away. Focus on net returns, not headline figures. Would you choose $70K after taxes over $40K? Most would. Optimize for after-tax wealth, use tax-advantaged accounts, capture employer matches, but don't let fear of tax stall your decisions. /n/n. Fact 4. Strategy hopping is a surefire path to failure. Yet many investors chase the next big thing: growth stocks, value, crypto, jumping when the market's heated and fleeing when it cools. That's buying high, selling low on repeat. The successful, they pick a sound strategy and stick with it through thick and thin. Buffett didn't chase calm mania, he held his principles steady and walked away right before the crash. Consistency trumps flair every time. /n/n. Fact 5. Simplicity beats complexity, almost always. The finance industry thrives on elaborate tools and packaged strategies because they come with high fees. But simplicity wins. Basic index investing, diversified, low-cost, consistent, beats complex schemes more often than not. People pouring hours into technical setups and exotic funds often underperform while paying up. True investing success is simple: diversify, minimize fees, invest regularly, and let time do the work. /n/n. Fact 6. Not all risks are equal. Some are calculated, others are reckless. Yet many avoid stock risks while jumping into crypto schemes with poor odds. That's like refusing to drive but swimming in dangerous waters. Smart risk is measured and aligns with your plan. Reckless risk is blind speculation using money you can't afford to lose. Recognize the difference. /n/n. Fact 7. Comparing returns kills progress. Social media is a highlight reel. Everyone flaunts wins, hides losses. Chasing others' inflated snapshots leads you astray. Instead, track your personal progress. Are you edging closer to your goals? That's what matters. Ignore the noise. /n/n. These truths aren't taught on flashy channels or in get-rich seminars. But if you internalize them, you're already far ahead of most. Avoid psychological pitfalls, embrace mistakes as lessons, treat taxes as proof of gains, honor consistency, choose simplicity, respect smart risk, and ignore comparison traps. Do this and you'll outperform 90% of investors without flashy gimmicks. /n/n. Now it's your turn. Reassess your strategies. Are you emotionally prepared? Are you learning from mistakes? Are your investments aligned with your net goals? If these truths hit home, take action today. Let your investing be grounded in honesty, discipline, and strategy. That's how wealth is built, not overnight, but over time.